Thank you very much, Chris, and thank you, Ken and Jim, for ably assisting in this matter. So I thought I would give a bit of a backstop my comments with some presentation slides today. So I'm going to pull up a presentation deck and put that forward on the screen. If you bear with me for a moment. Thank you. So first off, I just want to thank everybody today for taking the time to attend today's annual general meeting for the conclusion of fiscal 2024. Fiscal 2024 was a very successful year for our company, and we're very much counting on continuing on that track through fiscal 2025, the year that's now in process. With everyone, of course, remembering we have a September 30 fiscal year end. As you'd hope and expect, there'll be many forward-looking statements in my presentation and my comments today, and we do rely on the safe harbor provisions for those forward-looking statements. So thank you for your understanding of that. I expect most of you listening are current shareholders, but it's still worth mentioning our capital structure and listings as a publicly traded company. We're listed on the Toronto Stock Exchange and traded on the US OTCQX system. We have a market capitalization of about 60 million Canadian dollars and about a 40-cent Canadian share price. We do have certainly a very strong financial position, I'm pleased to report, and analysts have a target price of more than a 12-month target price of more than double our current stock trading price. So perhaps gives some indication of the targeted trajectory of the business. Jim, I don't know if you'd want to comment. The numbers on this slide are as of the end of our first quarter, December 31, 2024, which is our first quarter of fiscal 2025. If you wanted to update any financial metrics since that time, perhaps you could.
Sure, Cameron. I guess we've had a really strong beginning of this fiscal year, and we've been able to, through the confidence of our shareholders and our management, we've raised funds through the exercise of warrants and options. So that's helped in our cash position. We've also been able to expand our credit facility as per the announcement this morning with the TD Bank. And so our cash position, including line of credit, is over 18 million instead of the 15. And in the meantime, that includes being able to pay down over $1 million of BDC debt as of this week, in fact. So again, strong start to the year and to our financial stability and our balance sheet.
Thank you so much, Jim. And just to mention, as we'll talk about later, we are still very actively buying back and canceling shares outstanding through our normal course issuer bid program, which does enable us to buy back up to 5% of the issued and outstanding shares every year, subject to some very stringent trading rules on the part of the TSX. So that continues to more than offset the annual use of the stock option plan, which is part of our overall compensation system for directors, managers, executive management, and managers of the corporation. So thank you for that. Joining us today, we're delighted to have many members of our talented management team. It's certainly not just me or Jim and Ken, but very much a team, truly a team, as well as our dedicated and wise independent board directors. And in welcoming everybody to the meeting today, I'll just also emphasize that the board and management are very much also shareholders of Microbix. I was running some numbers preparing for this meeting, and collectively we own about 22 million shares of Microbix, and this is capital we've allocated at risk alongside other shareholders. So this is shares we bought with our own hard-won savings. So our interests are very much aligned as co-shareholders with the broader shareholder base. So thank you, and thank you everyone for joining us today and for all your hard work through fiscal 2024 and before and after that window of time. I believe most of you are aware of our major product lines in medical devices and test ingredients and their value drivers. So I won't go into great detail here today. Suffice to say that our list of clients really represents a who's who of the diagnostics industry. And we've become increasingly recognized and relied upon based on the quality of the work we're doing and the quality of products we're creating, manufacturing, and exporting all around the world. And whether this is for our antigens, our quality assessment products, or test controls, or our reagents, we're very much sitting in a unique place, that core of quality between our many customers in the categories of EQA, external quality assessment and proficiency testing, agencies, test makers, and clinical labs. And we're in that critical position between those customers and the markets they need to access in whether it's research use only in lab developed tests, fully regulated in vitro diagnostic tests, point of care tests. All of those clients are relying upon us. And in the most succinct terms, our products help ensure that medical tests actually work. And this is critical so that patients get the correct diagnosis, and flowing from that, the correct treatment. You never want to have a situation where a test isn't actually working and somebody who actually has a disease is told they don't, or somebody that doesn't have a disease is told they do. Each of those send a freight train going down the wrong track and result in some very potentially catastrophic outcomes for individuals and for the health system generally. And this is what we do, and why you're seeing growth in our business and our financial results being positive, such as we recorded in fiscal 2024 and thus far in fiscal 2025, and as well as before. And it's that same expertise as well that's led us to be able to identify and capitalize on an opportunity in the therapeutic drug area. And this is with Kinlytic, an FDA-approved clot buster or thrombolytic drug that we own, that is now has a fully funded partnership to help return it to market and generate some great earnings potential for Microbix from this program, while not diluting shareholders at all going forward. So we're very pleased to have a great partner and a great project plan moving forward. And Ken, did you want to provide any color around that and the progress we've been making on Kinlytic?
Absolutely. And as we've said many times before in the public forum, we're working closely with our sophisticated partners at Sequel Pharma, and the work is going extremely well to bring urokinase Kinlytic back to the marketplace. The group is no doubt aware that we engaged an international CDMO to upgrade processes to contemporary standards. That work is moving forward at a pace. We previously disclosed that the target release for the product back into the marketplace is 2027, and there's no change to that timeline whatsoever. We just continue to advance that timeline along its path. So yes, we're continuing to work very well with Sequel, and we expect a successful outcome to this project.
Thank you so much, Ken. That's great. Talking about this, it's difficult now to understate just how good Microbix capabilities and capacity have become. We now very much have globally competitive and cutting edge expertise as well as capacity. And it's that capacity, whether it's in manufacturing, whether it's in innovation and product generation and systems, that really sets us up to be able to capitalize on opportunities, have more customers, more touch points, and drive for greater success. And Ken, if you want to touch on maybe what we built in capabilities and capacity to secure those opportunities, that'd be great.
Capacity building, capability building is something we focused on over the last few years. We've used government grant funding and interest-free loans to drive this, as well as reinvesting our own profits. And while we maintain a profitable business, we've managed to develop the appropriate growth to get critical mass to realize further opportunities. For instance, we've gone from 1 building to 3. We've doubled staff. We've added machinery and capabilities. We've added the electronic quality management system, the enterprise resource planning software and integrated those to maximize efficiencies. All of this has allowed us to get the critical mass to build from there. And that will just allow us to build top line, increase efficiencies, build margins, and build profits. That's what we said we'd do all along. We're now just going to use that capability and that capacity to pursue the opportunities going forward. Things are going very well at Microbix, and we're going to continue to steer the ship that way.
Thank you, Ken. That's a great summary. And with doing that, we've obviously doubled revenues more than doubled revenues in the process, and continue to drive to that. And you could see just some of the things we've done across fiscal 2024. And I'll just remind everybody, our policy is internally, we announce things when they are done. We don't announce things when they are conceived. So these are fully baked projects that are now revenue generating and moving forward and moving ahead. And it takes time, of course, to get traction in the marketplace with new initiatives, but all these are building forward. And, whether it's in areas like cervical cancer screening using PCR detection of HPV, point of care testing, molecular diagnostics more generally, immunoassays, syndromic testing for a series of pathogens, any one of which could be cause of a set of disease symptoms, antimicrobial resistance. We're becoming recognized as a go-to expert partner for global firms in all these different areas. And we've certainly not slowed down. Just in the past 6 months, the capabilities that Ken spoke to are enabling us to accelerate the pace of innovation and sets us up to access even more new opportunities, such as in molecular pathology, recombinant antigen capabilities we're building out, emerging diseases that we're helping prepare to address. And with that comes the improving access to capital, such as from the exercise of investor warrants, political recognition, such as the recent visit from the Premier of Ontario, and ultimately also investor recognition, as we've seen from the share price appreciation, leading to a new 52-week high of share price in February. All of these, one flows to the next and generates the operational and financial success. And of course, the finances flow from that, with our achieving both record revenues of over 25 million in fiscal 2024 and record net earnings of over 3.5 million for fiscal 2024. And in so doing, we have balances to strike. And maybe, Jim, if I could ask you to speak to, how we balance between capability building, capacity building, and our bottom line.
Sure, Cameron. As Cameron just outlined, our revenues are greater than 25 million. We grew 50% on our top line, and that came from a couple of different sources. One is we saw 40% growth in our core businesses, our antigen and CAPS businesses, as well as we saw the recognition of over $3 million US in milestone payments for the Kinlytic product as well. And we've done that at the same time, growing our margins. Our margins grew from 40% last year to over 53% for our core business this year, producing 22% EBITDA. We've also taken the money that we've received and generated from the business and reinvested it in the business. So we're not just taking a tactical approach, we're taking a strategic approach. And we've invested close to $2 million in capital expenditures during the year. As Cameron indicated, we've repurchased shares We repurchased 2.6 million shares in fiscal 2024 and over 8 million shares since the inception of putting the NCIB in place a couple of years ago. So we're in strong financial position. We are balancing, looking at today's requirements, as well as we're making sure that we've got the funding to support the business as we go forward and work on the strategic projects that we have in place. So excellent position. As I outlined on the previous one of Cameron's previous slides, again, cash position has grown even in the last, I'd written my notes here, and we had 15 million in cash and line of credit, and we've invested a bunch of money in the last quarter, but at the same time, we've added to that, and we've now got over 18 million available to us to help grow the business as we go forward.
Even following repayment of debt and repurchasing of shares. Thank you so much, Jim. That's great. This is a great sort of point at which to move to a more future-looking orientation. We've talked a little bit about the past, a lot about the present. Where are we going now? Well, this is really driving continued growth in revenues and earnings in a variety of fashions. Continuing to grow our capabilities, our capacity profile, and using tools such as those outlined here to drive continuing growth in revenues, earnings, and drive share price performance as well. So where I'd conclude, in takeaways, is that we are successfully building shareholder value that is real, that is material, and that is durable. And by becoming that go-to partner for our customers, and applying the capabilities we have, we're creating a great suite of products and services that enables us to grow revenues, generate material margins, expanding net earnings, and share price appreciation. And that's why we're here, and we're doing it in a way that improves quality of life for everybody and adds to society. So we're very much a positive force in the world, as well as a positive force for our shareholders. So with that, we are very, very appreciative of everyone's ongoing support and participation in this journey that we continue to be on. And we thank you for remaining or becoming shareholders of the company. Much appreciated.